Welcome to Towards 2015, the program to broaden your business perspective in a big market which consists of over 600 million consumers, which is the ASEAN market. Asian Development Bank, or the ADB, has set up a seminar on analysis of Asian economy in the year 2011 and found out that the region's economy is facing a process of slowdown. How would Asia tackle back this situation? Let us hear from Dr. Iwan Aziz, a senior economist of the ADB.
สวัสดีครับ Dr. Iwan Aziz, the head of the Regional Economic Integration Office at the Asian Development Bank. Welcome to the program, Dr. Aziz. How are you today?
I'm fine, thank you.
So what are the key factors that are driving the global and regional capital markets?
Yeah, even before this last Friday decision by the S&P to downgrade the US credit rating, the global capital market has shown some degree of nervousness. Now, the good news is that for the Asian capital market, so the regional capital market, has been showing its resilience. And, you know, we can look at, for example, the equity markets, even though the equity market has not been as sort of strong as in 2010 during the first half of 2011, but we started to see the picking up even before the Friday decision. If you look at the bonds market, that's even amazing, because if we look at the local currency bonds in Asia, has been growing very fast, and the good news is that the fast growing local currency bond is taking place in corporate sector. So the corporate bonds, because we know that in the region, the dominant bonds market is still the government bonds. But now the corporate bond has been growing very, very
What is the ratio between the public and the private bonds?
Well, the figures I don't remember, but it's still government bonds. But I will predict with this new trend of this fast growing of the corporate bonds, that ratio will definitely decline. Definitely. So that's the good news. Now, the only problem is the exchange rate, because that's another component of the capital market. And the problem here is that because the region has been receiving a lot of capital inflows, especially after the Great Recession in 2008. And that creates a lot of problems, a lot of headache for policymakers in the region, because that put pressures on the exchange rate to appreciate, especially for the export-oriented countries, like Thailand, for example. So that is the area where we need to work more, including regional integration and regional cooperation.
I see. And when the S&P downgrade the US Treasury, there is a big impact on the global market and the capital flows. How that, in your opinion?
Well, you don't need to be a rocket scientist to predict when there was a case like what happened last Friday, the first time in the history that the credit rating of a country, in this case the United States, was downgraded. The first time in history.
1917.
Exactly. It's really expected that there is a nervousness, there is a panic, what I call the psychological effect. It is expected. But as the dust settles, I predict that Asia will continue to be an attractive destination for the capitals coming in.
What's your rationale? Why?
Okay, number one is the economic fundamentals. The region economic fundamentals has been very, very strong. Okay, of course, everything you have to look at relative to the rest of the world. Definitely Asia macroeconomic fundamental is good. Number two, Asia market offered a greater return and also greater depth now in the market. As I indicated earlier, the corporate bonds has been growing very
deeper market.
Deeper market as well.
And what Thai and other Asian governments should do is to protect themselves in the wake of the S&P downgrade?
Well, continue to focus on how to make the capital markets deeper and more open, more transparent. And also on top of what the individual country can do, maybe the region as a whole can also work together, come up with all kinds of initiatives that can facilitate the increase of the regional integration in the financial market. And this is applying to both the bonds market as well as the stock market, and also in the area of exchange rate. In fact, you know, last year there has been already talk among the Asian governments to explore the possibility of exchange rate cooperation because of the massive capital inflows to the regions that put pressures on their exchange rate.
In your opinion, what are the major downside risks for Asian and ASEAN economies?
The major downside risk is, I
Yes.
think it's not so much on the portfolio or markets, but I think more on the real sector.
Yes.
Because, you know, there are two effects that one can think of. One is what I call the quantity effect, and then the
Yes.
second is the price effect. The quantity effect is really working through the fact that Europe and the US economy will be slowing down, especially after what happened last Friday.
Yes.
And that means demand from that country will be slowing down. Just
Weaker
to give you an
demand.
weaker demand. And just to
Yes.
give you an example, the US
Yes.
is an economy where 70% of the economy depends on the consumption. So if the consumption and the investment decline, then that will affect also the demand for Asian goods, and that is
The export sector.
Export sector, exactly. So especially the export-oriented Asian economies will be affected, I think.
So in Thailand, export account for 60% of our GDP.
Yeah,
There will be big impact as a result of that.
Exactly. Well, one way, okay, this is all in the context, if you look at the context of the global imbalance,
Yes.
Everybody talk about export-oriented economies to start looking at the domestic demand, okay?
Yes.
Of course, we have to do that, and it is happening in Asia, but you cannot really go extreme shifting entirely from export to domestic demand.
Takes
So what
time.
exactly? So what happened with the export? They can start looking at alternative markets, and
Yes.
it is happening in the last 2 years. Export from Asia to other emerging markets as well as to within Asia has been increasing. You know,
I see.
other emerging markets like Latin America, even some African countries, export from Asia has been increasing.
So in your opinion, the ASEAN Economic Community in 2015, there will be a benefit?
Yes, of course, initiative like that is always positive. Now, of course, when it comes to the quantitative target,
Yes.
some target may not be met and so forth, but that's fine. I mean, as long as we know we are the direction, it's only a matter of, you know, how you achieve direction and how fast you achieve that direction.
So what are the other risks? Inflation pressure, you still worried at this
Yeah,
stage?
of course, inflation is still risk because, you know, naturally if you have a fast-growing economy, there's always threat of inflation. But given what I think is going to happen with the global economy, and that is slowing down, I have a feeling that the focus of policymakers in the region will be tilted more towards concern of slowing growth
Yeah.
vis-a-vis the inflation.
Less on inflation, oil prices are falling to
Exactly.
$80 a barrel
Yeah.
from over 100
Yeah.
recently.
That's right.
And then the other commodity prices also falling.
That's true.
So what are your other concerns on the global economy? You are not optimistic on the global economic growth, right?
Yeah, of course, it will be slowing down. Okay, not recession, but it's a slowing down. Yeah. It's not like in 2008, but it's going to be slowing down. Yeah.
And how Asian economies should adapt to that?
Well, as I said earlier, you know, in the area of export, we have to be more active in finding an alternative market to
Yes.
other emerging economies as well as to within the region. And of course, the domestic demand has to be sort of fostered further, which is already happening, but we need just to do it more, okay? And within Asia, there's some diversity.
Yes.
For ASEAN, for example, we need more investment, but for China, we need more consumption. So, but both of them are really domestic demand, basically. And this is the reason why I hope policymakers in the regions sort of provide the policy environment that can facilitate this, including monetary policy and fiscal policy.